Hello. This is Whitney Emanuel with Whitney Wealth Group. Welcome to our series on building tax-free assets. And what that means for you, we'll be covering what it means for you in the future or currently, depending upon where you're at your phase in life, whether it's retirement or you're accumulating wealth. But the goal of this video is to educate you on, and this video series is to educate you on how to generate tax-free income. So I'm really excited to dive in. This is a key tenet of the work that we do at Whitney Wealth Group for our clients, because we cannot necessarily control your rate of return with your investments, right? The market is the market, and it's unpredictable by nature. And we cannot control taxes. We cannot control inflation, but we can control are the assets that you have in taxable or tax efficient or tax-free buckets of money. And so we really like to strategize on the things that you can control, not the things that are out of your control. So we're big proponents of building tax-free wealth for you and your family. So I'm really excited to dive in. So just to get started, that was the intro, but now we're gonna start talking about Roth assets, Roth IRAs and Roth 401ks. So a Roth IRA is an individual retirement account. There's a traditional and then there's a Roth IRA. So when you put money into a Roth IRA, you're not making a tax deductible contribution like you would with a 401k or a traditional IRA. That is a drawback. You don't get that tax reduction from your contribution. However, after you put your money inside that Roth IRA, it grows tax deferred, meaning there are no taxes on any of the interest or dividends growth as it's growing. And then when you withdraw the money later on retirement after the age of 59 and a half, you never have to pay taxes on the growth after that. And so that's a really awesome way to grow your money. Keep in mind that all the limits that we're talking about in this video, as far as annual contributions that we're going to get into right now, it's for the year 2023. Those usually increase year after year, but this is for 2023. So make sure to check the year that you're watching this. So another drawback with a Roth IRA is that you can only contribute $6,500 if you're under the age of 50 or $7,500 if you're over the age of 50. So it's limited as far as how much you can contribute. Another drawback is that if you earn more than $153,000, again, that's a 2023 limit. If you're single and if you're married, it's $228,000, then you cannot contribute directly to a Roth IRA. There is something that's called a backdoor Roth, where you can contribute to a traditional IRA, not take the tax deduction, and then convert it to a Roth. And this is a strategy to continue to build tax-free wealth. You just have to take an extra step, and there may be taxes on that conversion. But it is a great way to accumulate tax-free wealth, and we incorporate that into a lot of our clients' savings plans. But we also have the 401k, and with some 401ks, depending upon the provider, there's a Roth component, meaning you can meaning that you can put money into the 401k and have it be Roth. Two really nice things about this. One, there's no income limit on Roth 401k contributions. You could make $500,000 and you can still contribute to the Roth 401k. Secondly, you can contribute $22,000 into a 401k in this year, and 100% of your contribution could go to Roth. If you're over 50, you could do $30,000. That could all be Roth contributions. So that's a large chunk of money that you could be socking away, and that's eventually going to be tax-free after the age of 59 and a half. 401ks also do allow for a 55, allow for an age 55 withdrawal. So we are a big fan of Roth assets and we recommend them often. However, there are going to be times when you need to balance that with the tax deduction today. And so some of our clients, we recommend a 50-50 with their 401k, pre-tax and Roth. Lots of different things to consider here that apply to your own personal plan. But overall, we're a really big fan of the Roth IRA, Roth 401k contributions. And so that's the first of our series, the Roth assets. Next, we'll be talking about health savings accounts and how those grow tax-free. So please stay tuned.